Hey traders, Park here with another indicator. Actually, a better explanation of my signals indicator. I didn't go into a great depth with the last video on it, but I wanted to do a video by itself and go in more depth on this one. So for the most part, the signals are different signals telling you what's happening within the candles or within the ranges of the candles. So the first thing you notice right off bat are these the clouds, and they're basically from my range box indicator, and it's usually is using a channel, the channel indicator from the stock, and when it goes flat for a certain amount of bars, it'll actually create this support area or resistance area. Right now, so that's how these boxes supporting the resistance boxes are created. And the next thing that's in this indicator are these triangles. These triangles represent exhaustion. That's what you see in exhaustion range from the label. And it's just basically telling you that these ranges, and I'm using high and low, but you can go in there and manipulate it and change it to the body of the candle or the close in between closes. But right now I'm using high-low range, and this range is above average, but volume is below average. So it's a signal that it's possible to pull back and the move is not validated by volume. So you could look at it this possibly just a pullback, and it's like Ann Coolin said, it's market makers possibly doing their things or trying to trap people. But for the most, or trying to manipulate people into fear. When you see these big candles and you don't have volume or you don't have something else to tell you anything different, then you could possibly jump out of it. Or if you see these candles and you don't see increase in volume afterwards, it could be a possibility. Like I said, people are not participating in the pullback, or people are not participating and selling the pullback, but actually possibly buying the pullback. And that's what you're seeing with this long lower wick. The next thing right here is this is a price deviation. Basically how these work out is when you have a lower low than the previous low and you have a higher close and volume has increased. That's when you get a bullish divergence dot right there. Same thing with the bearish divergence. You have a higher high but a lower close, and volume increase on that bar right there. And you can see with this long upper wick that sellers came in, was trying to sell it down. They pushed it down, but you got a lower low and you got another bullish divergence dot down there. And it pushed above. So the bullish divergence is when you get a higher close, a lower low and a higher close, and higher volume than the previous candle. And the bearish divergence is the exact opposite. You have a higher high, a lower close, and increased volume from the previous candle. The other thing you'll notice, these triangles represents, you can say bullish engulfing bars, but for the most part, I call them volatility bars. It's, the candle made a new high and a new low, so I consider it a volatility bar. So going from there, you see now you have your inside bar. So this is just saying that this is in Japanese candlesticks, it's called a harami. Basically, this bar is inside this bar right here. It's the opposite of a bullish engulfing. So right now it's considered inside bar just because this high and low, or the body of this, the high and low is inside the previous high and low, and you can use it as a range. I'll show you some more examples in a moment when in identifying the inside bar range. And this right here, this arrow right here just represents the volume multiplied by the range of high and low has made a new high. So there is a lot of selling here. You haven't got another one. So you get a red one, and there's green bars as well. But right now, you can see what's happening in the S&P 500. So you have two ranges actually. Well, this one actually stopped because this high is no longer below this the previous high. It actually made a greater high, but you also getting these triangles as well, showing there's not deep. That the volume is below average. So You can see right here where this range carried on and this range carried on into another range got created, but you still want to pay attention to the previous range. I'm looking for a green triangle. I don't want to use the ones in pre-market, but you can see how this range increase in volume. This range right here is basically the green triangle is telling you that volume times the range being tracked is above average or made a new high. And that's why you got this candle right here. Even though the stock actually broke down below this inside range right here, inside bar range, you can see it pushed right back above. So it's just something to pay attention to. And you also got a bullish divergence dot as well. So it's things to pay attention to. But I'm going to go ahead and cut on volume so we can get a better understanding or a better picture of what's going on. So we'll say paint the bars, and I'll move this one down so we can actually see everything that's going on. And this is what I meant when you put my volume indicator in place. That's when you have a better understanding of what's going on. So this is all lower than average volume. These dark green and dark red bars, so you can almost see as if the stock is actually stock is just ranging. It doesn't have enough volume to push it higher, and it doesn't necessarily have enough volume to push it lower either. So right now you can almost see that it's just trapped in between these two ranges. This previous low right here and this high of this range right here. And it's also made a new inside bar, and that's what this label came about. But right now I have the volume on buy sell pressure. I'm going to change to close by close or close to close. And with volume or with my candles, with the coloring of the volume, you can actually see everything I said before. This buying pressure right here, you can see this volume was greater on this candle, and that's why you got this bullish divergence, and you got this bullish divergence here because volume was even greater on to the buy side with the volatility, and it pushed up until you got to this point right here, and that's where that pressure stock was trying to push higher, but sellers came in and it pushed lower, and that's where you got this blue square right there. And it's just another warning telling you, hey, you're entering into a pressure area, and most likely it came back to this area of resistance, because once support is broken, it becomes resistance. And you can see right here, it's lining up almost perfectly with this box right here, or with this previous low that was broken down here. So for the most part, when it comes to the exhaustion candles and the high pressure candles or signals, whatever, you're better off paying attention to when they're at the high of the range or lower of high of the trend or lower the trend, and they're just giving you different identifiers of possible trend change. And right now, it just looks like the S&P 500 is just ranging right now. So let's push it back to the previous day, and we can see at the start of the day, let me pull it back out a little bit. We can see at the start of the day we were getting a lot of inside candles, and you can see right here how the stock just stayed inside this range right here, even though this larger range with the clouds right there, it finally broke above, but it couldn't go anywhere. It came right to that range right there, created a bearish divergence and a new volume VSA, volume spread analysis, bearish volume spread analysis. So you get a label for that as well. And it got pushed down below with the volatility also with this new high, new low. So that's when the stock just went down from there. Once it broke below this low, it really couldn't get back above that area, or you could say it did, but it couldn't sustain it. But these two bars right here are exhaustion bars. So you really wanted to wait and see, and it was pushing down, but you got this high pressure bar right here, a high pressure range right here with the blue dot after it pushed down, because buyers trying to push it back up. and then it just came with weak volume, and that's all you see, and it just went down to the downside. And you can see right here, buyers are trying to bring it in, buyers still trying to bring it in right here, low volume, and then you had this pressure right here. It created this range. You had this high pressure range right here with the bullish divergence giving you a combination to possibly go long once it broke above that range. You wouldn't have been, I mean, it would have came back down, but if you were to use this low right here as your risk, you may have got stopped out, or you could have used the bottom of the range, this range, inside bar range as your risk right here. And you've probably been happy, at least until it came to this point right here, or you could have watched that high or that high. But for the most part, that's how the signals indicator works. The different things that are in the signal indicator are, you could change the average. Whatever average you're judging your ranges by, your volume by, you can change volume to tick volume versus regular volume. Here's your range types. You have high to low. You have the body of the candles. Then you have the close to close. And then you have your breakdown signals, breakout signals. That's when the stock breaks above or below the clouds. And there they go right there. Those yellow candles, and I forgot what color I used for the break. Well, the white, yellow and white candles. I mean, yellow and white arrows is what are for the breakout candles. Break above those areas of resistance and support, and that's what you're getting right here. You can see right here that this broke above this this range right here. This the top of the range box right here. You got to break above, and you won't get anything if it doesn't break above. And it takes the average of the high, low, and close to actually get a break or actually start those candles. So we will cut those back off. And for my range indicator, if you haven't watched that video, you can choose to have the high and low of the channel to be independently. Is the range top and bottom. When I say independently, I mean them to be flat independently, or when both are flat for a certain amount of bars, then you can use the middle one and you'll get a different profile. And you can see how everything has shifted and changed. They use this high and this low, and it for me it helps cut down a lot of noise. If you use the middle band, but you won't see it as much, but it's fairly accurate. But it will only show up if both bands are flat at for a certain amount of bars. You can push over to the day, and that's what you're getting also. And they'll show up together. And right now the S&P 500 is just ranging. It's after 9:45 here, and I don't know of any news, so it's not been very volatile. What else I want to show? Also, the other things are in this range. You can hide the box clouds, and that's both based on those two boxes. You can show the lines that go along with them. If you don't want the clouds, you can have the box lines like that. Let's go. We're gonna hide those. Hide inside bar lines. That's basically those inside those white bars. And the Holy Grail is just when you get an inside. Holy Grail is when you get an outside bar, inside bar, or bullish engulfing into a harami. And it's just basically a pause on volatility, because you had a volatile bar and then there was a pause. And that's how I look at it anyway. And I'm going to go to a Nirvana. I want to see one. So your Nirvana is just the opposite. You had an inside bar into a volatile bar. So you had a quiet period after this move. I see the inside bar as a quiet period into a volatile period, and the volatility pushed it down to a low. And that's how I look at those things, or look at those two. And you can have them together like this. You can say from this quiet period here to a volatile period, and you got that push down below. I'm looking for a better example where it actually worked out. But a quiet period into a volatile period, and you got to push down. I guess it would be the opposite if the close was different. But I was looking for a positive one. I think there's a positive one on. Should be a positive one on this stock. Let's see a positive. So this would have been a positive one right here. Here's your inside bar right here. Here's your outside bar or your engulfing bar. You have this trickle down, and then you got the push up above, and you also you got to break above this range as well, this inside bar range. So that's how the Holy Grail Nirvanas work out. And you can see right here, you got your volatile period into a quiet period, and it was a green candle. And the stock pushed up, but you got a bearish divergence on this one. And you got a bearish divergence here on the volatility. But I would wait to see what the next candle, if it actually breaks above that high, I probably would have took it and ran up to this resistance line up here at 34. But this is where the signals might not have worked out, or you could say they actually did work out, because all these blue squares show you that there's high volume on low ranges. So it's very volatile right here, or going down in there, and you're just getting selling, and you don't have any green candles up until this point right here. And this probably was a support area before it got broke down, but for the most part, and it's after 9:45, so the stock started raining, even though it's still trickling down, or waterfall, or just still going down. You still can see how the different signals worked out. And we can look at AI today. You have a new VSA up, a VSA volume spread analysis going to the making a new high after this high right here. It got that push down, and it pushed down below the support area, and it you got buyers that came in, even though this volume wasn't this volume was not greater than the previous candle. That's why you didn't get the bullish divergence dot right there, but it's still bullish divergence because you have a lower low and a higher high. Lower low and a higher close. At least that's how I look at it. And then you got these buyers about it and buy it all the way back up to here, and to the point where you got a bearish divergence and a high pressure range. And now you have this quiet period, or this exhaustion candle, and it's pushing down. All this is just low volume. And it created this range right here, and created this this range right here also. And even though you have some pressure to the sell side, because this volume actually increased, too, but it's not as great as these last two candles right here. And you have buyers trying to push it back above, and you're just waiting for volume to come back in. And if I switch this back to range top and bottom, it's not showing anything too much different except for that breakdown and that push above. But this has been the signals indicator. You can get this one separately. If you don't want to use my volume indicator, you can get this one separately. When it comes to the inside bars, you can still get those squares if you want those. But I actually cut those off. But it's just showing you where the inside bar is. Inside bar right there. And like I said, you want to pay more attention when it comes to these triangles and these squares at the top of ranges or at the bottom of ranges. You can generally see a stock if it's ranging or if it's trending. And right now, this one's just ranging. You can just see how volume just almost fell off a cliff down here. And you're just waiting right now. And looks like it's trying to push above. So we'll see if we get a range break or not. looks like it's just gonna be trending. I mean, just basically staying within this range. But this works on all time frames. Let's see. So works on all time frames. Like when I'm on a daily chart, I usually push things up to 16. And it's already down 16. But it works on all time frames. And you can see how things have worked out for the AI. AI just came right back down to 20. And these were, so yeah, those were previous support areas. So really can move those because the stock broke above those, but it didn't break above this one. And it came right back to this support area right here, and that's where it's kind of sort of just bouncing back up and down around 20. And you can see, you know, this is the bottom of this range or bottom of this move right here, and you got an exhaustion candle and a volatility also, and it pushed back above. It came back to the line. You got an exhaustion candle and a bearish divergent candle and a volatility. So it pushed down, but it didn't go anywhere. And it's been holding 20 pretty strong, or somewhere around here, around 20, where it's been holding. So you can almost mark out another range if you wanted to. So, but this is the main area of resistance, that 30, 34, and that's coming all the way back from here. I think I was looking at it on that weekly chart. Yeah, looking at it on that weekly chart, and that's why I put those out there. And this is my ATR indicator that's on here. And where is it at? So it's battling with that previous month's close. This is the previous month's close. But the indicator works on all time frames, and like I said before, I use on the daily I use 16. On the weekly I use 13, and on the monthly I use an average of 3 months. And on the 5 minute I usually use an average of 12, but I've noticed when I was doing more research on the using this as averages, you make the guy was using he was using the same things, same signals that I'm telling you about, or some of the signals when it comes to the exhaustion and the high pressure ranges. He was using on the 20. So that's what this is what it looks like. I changed volume to 20 as well, and it gives you a completely different profile, especially when it comes to the color of the bars and the ranges as well. And you can see right now you got to break above this bar range, and it's coming into this range right here. This range box, or the top of the range box, or the lower part of the range box from the high. So sit back and see it for a second. I don't know, it's not above average volume. So that's my only reason for it to sit back out of it. And I even put this on 20 versus You can see after I changed the profile, I changed everything to 20. You can see right here, you had a high pressure range for buyers trying to push this back above. You had the bearish divergence. You had the exhaustion candle right here for sellers trying to push it below. This candle was in line. This candle will show you a high pressure range because of the lower wick. You can see right here that buyers pushed it back above, and then it created another range after this range was broken. So far, everything is working out. But this is the signals indicator. I'm gonna change this to another trend, a hollow trend. I'm the reason why I'm doing that because I'm looking for something. But for the most part, you put on a bicep by pressure, and once I press OK, this candle should change colors because there's buying pressure here and there's buying pressure there. And that's, at least when I say buying pressure, it's according to these wicks right here. You can see the buyers really stepped in on those points right there. And I didn't pause it, but I went quiet because I wanted to see what the stock was going to do. Was it going to break above here, or was it going to sit in this box or this range right here and just signify resistance? And that's basically what it's doing. You're not getting a lot of volume down here. It's all below average if you're using it on the 20. But for the most part, it created a new range or a high inside day or inside bar range. And that's basically all those dots mean right there. Even though it's on low volume, looks like the stock still wants to move higher. And you got better signals when I push it to 20. And you can see the stock actually pushing above, but you can see this last 20 bars is still below what the last 20 bars was, and it's breaking above on low volume. But you're not getting any signals other than this past signals right here. But it's also finding resistance with that higher wick right there. But it broke out of this inside bar range, or this quiet period, you could say, and it's creating another one. But it may push higher. We'll see more volume, but this volume is higher than these last couple of bars right here, these last three, and you may get a different profile if I change this back to 12. But it's whatever average that you're comfortable with. And like I said, I use 12 because 12 bars on a 5-minute chart is an hour. But you can see what signals that gave you. But I still prefer 12, and it's still below average even for 12 bars. This one almost pushed above average. But let's see. I'll push it back to 20. I apologize for going back and forth. But I just wanted to show you the difference between the way the guy was using 20 and I was using 12 for hourly. But that's the reason. These are the signals that you're gonna get, and it looks like it's breaking above. But you can see how this gave you a better identifier of a breakout out of this inside bar range right here, and it gave you a nice signal to go long. To possibly go long, but you would still hit this resistance right here. But it's breaking above, but it's still having some trouble. And we'll go back to the S&P 500. I kind of want to stay on this one and see what the S&P 500 is doing. S&P 500, it recoiled up, came back down, found this little quiet period inside this inside bar right here. Bullish divergence dot right there, pushed above, and this is exhaustion. I mean, this range, what it's saying that this range between high and low is not validated by volume because it's a below average range. I mean, it's above average range, but below average volume. But the S&P 500 is trying to break above this high area that it made before, and it just created another range as well. And in these volume levels, you get ATR, and it's this ATR average true range for the last 20 bars, and this is showing you it's on the daily period. The average true range for the daily or the 16 days is $5.81. But you can get this one separately, and you can buy them together. But just look in the link in the description, and you can get all your information there. If I hope that you found this information educational or worth your time, and don't take this any type of financial advice or anything. I'm just sharing some of my experience here and some of the things that I've learned. Uh, if you haven't already, please like and subscribe. And if you have any comments, please leave them in the comment section. And I really appreciate you guys taking the time out to listen to what I have to say. And God bless and stay safe out there.